Well, if you're buying the certificate, you're going to end up getting a return on your money. Now, Colorado uses an interest rate that's based on a federal funds rate. Welcome back. This episode discusses what happens if you don't pay your property taxes in Colorado. Now, the short answer to that question is just what you expected. Eventually, you might lose the property. Each state has a legislature, and they make the rules that govern the state. Colorado is definitely a tax lien certificate state, and the rules are created by the state legislature, and then what they do is they push the rules down to the county commissioners or the board of supervisors, and they enforce the tax lien or tax deed rules. Now, auction buyers should be cautious in Colorado as in other states, because even in the different counties, the rules are different. So the states and the counties have different rules that they make depending upon what the terrain is, what the geography is, how they want to collect taxes, how they don't want to do it. So you have to be aware of those rules at every auction and know that you need to do research. Otherwise, you could make a big financial error and not make money at that tax defaulted auction or a tax lien auction. So Colorado has a process that allows for overbidding. Now, what's overbidding? That means you could bid more than the tax certificate is worth. In other words, every time you push it up, you're going to decrease your rate of return. All right, if you overbid, you will not get that money. So investors do actually overbid to get the tax lien certificate. Now, if you do, what's going to happen with that money, it'll go to the county. It will not be added to your rate of return. If anything, it'll decrease your rate of return. So my point is, in Colorado, the investment process is different than other stations, other communities, and other counties. So student investors really need to take the time and study and understand what the bidding process is and what's going to happen to your money. Folks, it's your money. You need to pay attention to what's going to happen to your money. So tax lien certificates are available in about 1,500 of the counties across the United States. What you do with your money is you invest with the county, and you're going to get your money more than likely back from the county. 97% of these certificates are going to pay you, but some of the certificates don't pay you, so you'll end up getting a property. All right, this is not a complicated process. It's relatively simple, I should say. Guess what? Colorado tax lien sales are a little different than the state next door. So entrepreneurs, one of the biggest reasons they get involved in this is because they want to be self-employed. Okay, they don't want to fit into the corporate network. They don't want to be in that mold. They don't want to be in a template. They want to work for themselves and not someone else. Okay, that's okay with me, but if you're going to work for yourself, then you're going to have to pay attention, do the research, and make sure that you understand these rules at these tax defaulted auctions and tax lien certificate auctions. Now, many of the student entrepreneurs that I know, they'll work 40, even 60 hours a week, and guess what? At the end of the week, they don't make as much money as they did while they were working for a corporation. However, they're making their own decision, and that's what they want to do. So if that's you, I compliment you. You'll get better and better. The better you make those decisions, the more money you are going to make. Today's episode is addressing the question, what happens if the property owner does not pay the taxes in Colorado? The answer is the unpaid tax will first become a lien. Now, ultimately, that's going to become a levy if something doesn't happen. In other words, if someone doesn't buy the tax certificate or they don't have an auction, that's going to become a levy. All right, so the point that I want you to understand, first, there's a lien that will be filed against the property. Ultimately, the treasurer can file a levy against that property. The treasurer has a specific obligation to collect property taxes. Why does the treasurer collect taxes? They need the money to run the government. They want that money to pay for the schools, to pay the school teachers, to pay for the fire department, pay for the police department, the sheriff department. You're getting the idea. County employees. All right, all of those things are paid for from the property taxes. So the county treasurer has power to collect property tax. Now, the local county needs that revenue so they can pay for all the services that I've just mentioned. Imagine if they don't collect money, they're not going to be able to pay the school teachers. Well, those school teachers, when they go out of work, they're not going to get paid. Well, they're not going to probably ever be back. So if the property owner fails to pay the property tax, the county will have a shortfall. In other words, they won't have enough money to pay their budgeted expenses. So it's very important that the treasurer do their job. Well, when they do their job in Colorado, they're going to sell tax lien certificates to the property owners who default on their property taxes. Now, to prevent that budget crisis, the county's going to collect that money. The treasurer is going to collect the money from the tax auction. In other words, whatever's generated from those tax lien certificate sales, they're going to use that money to pay the county bills. And what are you going to get out of that? Well, if you're buying the certificate, you're going to end up getting a return on your money. The return is different in each one of the state. Now, Colorado uses an interest rate that's based on a federal funds rate. All right, now I don't know what the federal funds rate is, but you could find out. But generally what Colorado does is they take the Fed funds rate, and they add about 5% to that. All right, so if the Fed funds were 4% today, they add another 5% to it, so that means they're going to pay about 9%. All right, now a new investor needs to learn how to research. If you don't know how to research, then you need to come to our classes. We have research every single day. There's someone to teach you how to do that research. It's a Fed funds rate. We're not going to teach you how to do the federal funding rates. We're not going to teach you that. But we're going to teach you how to research and know about every tax lien certificate in the different states in the United States. This is not new. Everything I'm going to teach you has been around for over 200 years. All right, so the county is going to sell at auction tax lien certificates at a public auction. That means anybody can go. They're also going to put it on their website to let you know how many certificates are available, and they're also going to publish it in the newspaper. So there's lots of ways to find out about Colorado tax lien sales. This has been around for a long time. Once you learn how to do it once in one state, you can learn how to do it in the other state. All right, now, this is buyer beware. What do I mean by that? If you do an overbid in the state of Colorado, in other words, you bid more than the certificate, you overbid in your zeal and excitement to get it, and you overpay for it, that money will not come back to you because the county will keep that money. So they're not encouraging you to overbid. All right, the rate that you're going to earn is going to be a Fed funds rate plus about 5%. Now, I say about because it's up to them to decide. The state and the county can decide all that. So different counties within the state may have different and unique rules. I can assure you, state to state is unique, and county to county can also be unique. And I mean very unique in that they're not even the same. All right, so basically what I'm telling you is every county is a taxing jurisdiction. That means they can make their own rules. That means a new investor must be knowledgeable about the rules. So if you don't know the rules, don't bid at that auction until you do know the rules. Overall, tax lien certificates are public auctions. They're on the public website. They're going to be advertised in the newspaper. All right, so you'll know. They're not trying to hide anything. Everything is disclosed, but you need to learn to research so you know what it is. The property owner normally returns and redeems the property. In other words, they defaulted on their taxes. The county has sold a tax certificate, and now the property owner is going to come forward and redeem the certificate. In other words, they're going to buy it back from you. When they buy it back, they have to give you all the money you invested plus the interest rate, and then they're going to be able to get their tax certificate back. But you have to know the numbers and exactly what they're doing, because if they do it wrong, nobody's going to come forward and tell you they did it wrong. All right, so if the delinquent property owner does not come forward and pay the tax lien certificate, that means you're more than likely going to get that property in a very short period of time. You're going to end up foreclosing, and you're going to end up owning that property. All right, so what happens with the wise investors? They know exactly what price they're going to pay. They know exactly what they're going to do about bidding up or bidding down. Okay, as my point is, if you don't understand the tax defaulted auction, go to the auction and watch what happens. Ask a lot of questions. Ask at the county. Read the county records. Go to the different source and see, source I mean, by that go to the statute, because it'll tell you exactly how the auction is going to work. All right, so my name is Ted Thomas. I'm about to finish up this video, and as I finish up, I want you to understand you can go right below me, and you can see a demonstration of an interactive map and auction calendar. If you see the white circles on this map, it will show you where all the tax liens auctions are taking place and the tax defaulted auction. So you'll know how many properties are being sold or how many tax liens are being sold. You'll know all that information. And there's a demo. Just go right below me and you'll find it right now.